This is absolutely my favorite topic to talk about on this channel. Where are stocks going to go from here? I'm never going to make a prediction on when or where stocks are going to fall. All I care about doing is I look at long-term valuation metrics that have been highly correlated, over 90% correlation to future stock market returns, and I make my decisions based on that. Now, where do we stand right now? Well, we have 3 metrics that I look at. Stock market to GDP, 10-year cyclically adjusted PE ratio, and the price to sales ratio. So if you're new to this channel, you need to watch this entire video because I explain it very thoroughly why I view things the way I view things. I'm Paul, I'm a value investor. This is Mo. He's a value investor as well, but also a trader. Now, our goal is to find disconnects between price and value. And I use long-term people emotional responses to the market to make determinations on where we stand in the market. Does that mean I'm not going to buy stocks if I think stocks are expensive? No, I still own stocks today. But am I going to be more conservative when the euphoria is abundant and clear? Yes, I am. And when things are looking the worst, that's when I feel the best. So if you check out my Instagram page, you'll see back in the crash of COVID, there are pictures of literally me kissing the screen when stocks were down 7-8% per day. I loved it because I love buying investments at cheaper prices. So the 3 metrics I look at. First one, the stock market to GDP ratio. Very simple. It is known as the Buffett Indicator. We are going to have this on our Everything Money website. We're going to have all 3 metrics constantly being updated so people can see. But the historical average for this is about 80%, and we're currently at around 160%. So according to this, it says stocks need to fall in half to just get to reasonable levels. Now, keep in mind, over time, as GDP gets better and stocks fall, this will fall a lot faster. So it'll make things maybe not have to drop in half. That's the point here. We don't know what's going to happen in the future. Next one, 10-year cyclically adjusted PE ratio. It takes the last 10 years of earnings on the S&P, brings it to today. That's what takes the cycles out of it, cyclically adjusted, and takes the stock market market cap divided by that. And historically, it should be between 15 and 16, and it's currently around 29 to 30. Now,
it's funny how these are all
stay
double.
A little bit. What was that, Mo?
It's funny how these are all double.
Yeah, and that means we're about double. Yep. Now, before I explain the last metric, I want you to remember, there are ways to make money in every market, whether it's up or down. Mo's going to explain that when it comes to long-term trading right after I do the next metric. But also, we do options on our channel. There's ways to make money in options where you can get paid to wait for stocks to fall to the prices you want them to fall to. You can make money owning on options, owning the companies you own currently. Our final metric, the price to sales ratio. This is very simple. It takes the entire market cap of whatever stock market S&P, divides it by the sales, and historically it's around 1. Right now it's 2.4. I will say this, historically it may have to go higher than 1, and the reason being is as our economy has changed and become more service oriented, the price of sales should be higher, okay? This was very focused on manufacturing. So let's say it's 1.2. Let's give it a 20% premium, which is a lot. It's still falling in half. So these 3 metrics, it screams that we're going to have a tough next 10 years. But your job as an investor is to dollar cost average every single month for the rest of time, because stocks will do this. But along the way, along that stock value, it's going to do this in actual price. And if you buy all the time, you're overpaying sometimes and you're underpaying sometimes. But over a long average, you're doing this. But Mo, explain to these wonderful viewers how they can make money in trading, because that doesn't care about what asset you're buying, why you're buying it. All you care about is the charts and the price movement.
Right. I'm going to show you Apple right now. And like Paul just said, it doesn't matter. But I want to point out to you that Apple is something that you can make money on the way down on. That's the important thing right here. What I'm looking right here, this is a long-term chart. So I'm looking to buy stocks in here or sell stocks short over weeks to months. I mean, you could be in a stock for up to a year. And right now, Apple has a big downtrend. It's been hit very big since it was last at about $175 a share. Now, here's the other thing. Apple today has dropped below its 100-day moving average. So not only is it below its 200-day moving average, it has dropped below its 100-day moving average. This is a very, very bearish signal that you can make some money on. So now, what's the next buy signal that I look for? It's that engulfing candlestick down. Engulfing candlestick down, and I'm maybe thinking that Apple can go back to this 130 number. It was just there a couple of months ago when everything hit the fan. Wait for some volume to come in, get an engulfing candlestick down, meaning that the price is coming down. There's consensus that it's coming down, and you can ride this thing all the way down to $130. It's really not that difficult. You're just following that trend and letting the volume of the market take over. But the fact that you can do something like that with Apple is absolutely incredible.
Absolutely.
You can do it with anything.
And the great part is, I'm a value investor, tried and true. When I met Mo, I didn't believe in charts. I'm like, oh, come on, that's gibberish. And then I started seeing how he looked at charts and the money to be made. And I was like, holy cow. And I did well. I did very well. And I like the idea of making money in a different way. Remember, there are multiple ways to skin a cat. You don't just need to make money one way. There are multiple ways. I have real estate. I have businesses. I have stocks. I have options. I trade. I do all of these methods to make money. Why? Because I enjoy the process of learning how to make money. So if this makes sense to you, you absolutely need to subscribe to this channel, and you need to sit here and learn what's going to work for you. Some things aren't going to make sense to you. That's okay.
Perfectly fine.
Just because, what was that?
Perfectly fine.
Yes, just because something works for me doesn't mean it's going to work for you. And that's quite all right. I love the numbers of the market as I showed you, but I'm the guy that if stocks do fall 50% like they think they will, I'll be the guy dancing all over going, this is the best thing ever. And you'll want that reassurance. Trust me, because stocks are down 15, 20% so far this year. And people are feeling like, oh my God, this is a bear market. Guys, I personally don't believe we've seen anything yet. And I'm not one of those people who's negative Nelly. If stocks were to fall 70% tomorrow, you know what I'd be saying on this channel? Guys, it's going to be a tough road, but if you buy today, you're going to do very, very well based on historical numbers. And that's what I want you to understand. This is a long process, but if you have a while till you retire, which is our average viewer, you can make a lot of money just dollar cost averaging and increasing that investment when stocks are selling below their historical averages. Let's say that stock market GDP ratio of 80%. Let's say we get to 60%. I would be encouraging you, go get a side hustle. You can invest more in the market. Yep. You will do way better investing because this would tell you that projections for the future are much better than they are today. And that is what's awesome about investing. If you can stay rational when other people are being crazy, you will absolutely make more money. It's easier said than done, but it's absolutely awesome. And that's what people in our community at everythingmoney.com have done a great job with. They're getting their mindset around the thousands of people there, all sharing the same views on the markets. And some people ask me, Paul, how can you trade and do value investing? I look at them as totally separate things. To me, it's like saying, Paul, how can you play tennis and also play soccer? I don't think they're mutually exclusive. I can enjoy both. By the way, I don't play soccer. But the point is, if I did, it'd be those things. I just enjoy both. I play chess and I play tennis. Paul, how can you do both? Well, very easily. I play chess here, and then I put on my tennis clothes, and I play tennis here. No different for any type of investing we're doing here. But we also have a great analytical process of looking at companies. So you need to watch more videos, including the next one where we explain our margin of safety even more thoroughly about why you should buy with margin of safety. So thank you very much for your time, and don't forget to subscribe.